So, good afternoon once again. We are in the Greener Group. And I'd like to thank you for joining us on your lunchtime. As you know, this event is organized in partnership with the Telfer's Alumni Association. That said, I'd like to invite Pouya Saffi, board member of the NBA Alumni Association, who will be our Q&A moderator today, to say a few words. During the session, we ask that you please keep your microphone on mute, but you can keep your camera on if you'd like. Just a friendly reminder that this session will be recorded. Over to you, Pouya.
Hi, everyone. Glad to have everyone in this room today. I'm excited for this conversation with Oshada that will be happening today in our session. So quickly, today I'm representing the MBA Alumni Association, and I thought I'd quickly mention the vision and mission of what we're trying to do. So our vision is to try to be an active and vibrant association that is the primary resource to engage, connect, and provide continuous education to the MBA alumni. And our mission is to inspire passion, pride, camaraderie among current and future MBA alumni, and to foster a mutually beneficial relationship with the Telfer School of Management. I'm proud to present Oshada here for a conversation. Oshada and I have known each other for quite some time, since high school, and we knew each other through university, and we were just 1 year off from each other when we completed our MBAs, having graduated in 2013, and Oshada having graduated in 2014. So currently he is a senior clean tech advisor in the Government of Canada. And he's also worked for over a decade in the energy industry, spanning both private and public sectors. He has lots of experience both working in small advanced biofuel startups with Iogen Corporation, which is the largest oil and gas company at the time, which was ExxonMobil, and now in the public sector, where he works at NRC to advise on domestic clean tech investments in the areas of bioenergy and hydrogen. He's also a professional engineer in chemical engineering from the University of Ottawa. He's passionate about the Telfer brand. During his graduate studies, he worked towards strengthening the Telfer name as the president of the MBA Student Association. He also shares his clean energy passion by coaching the Telfer JDC sustainability team. And in his spare time, he likes to get stamps on his passport when it's permitted, plays pretty much any sport, and likes trying new recipes as well. So please join me in welcoming Oshada on his presentation. Thank you.
Great, thanks Pouya, thanks Andrew. Just to get everyone on the same page, just going to quickly define sustainability. So this focuses on meeting the needs of the present without compromising the ability of future generations to meet their needs. And the concept of sustainability is composed of 3 pillars: economic, environmental, and social, also known informally as profits, planet, and people. And embedded in most definitions of sustainability, we also find concerns of social equity and economic development. That said, I'm going to speak more about the natural resource side, as this is what I've been working on since I left Ottawa U. So in terms of what to expect, my wife actually recently gave birth to our first son, and I wanted a heads up of what to come. So I turned to the Bible of all parenting books, the What to Expect franchise. And for me, some of it was, obvious and new. Some of it was spot on. Some of it was wrong, and some of it actually didn't apply to me and maybe never will. And I share this because this is what I've tried to put together today. And similarly, some of it will hopefully be new. Some of it is obvious and spot on. Some of it is probably wrong, and some of it might not apply to you. So I will maybe jump right into the first topic. So you guys have the screen and you can hear me? Well, you're good? Perfect. All right. So back on schedule. A little dad joke. All right. So first trend. Greenwashing is the practice of spending more time and money on marketing oneself as environmentally friendly than on minimizing one's actual environmental impact. And in the short term, I think we will see more demand for proof of what lies behind the words companies are using. For example, expect to provide substantial detail and clarity to questions such as, what do you mean when you state that your products are biodegradable, eco-friendly, or recyclable? Many businesses use these terms, but can you explain exactly what they mean and how your product, service, or business meets those standards? And a few cautionary tales in this area. Just last year, IKEA's stellar sustainability credentials took a real hit when the furniture retailer was linked with illegal logging in Ukraine. An 18-month-long investigation found that IKEA is selling beach chairs made from wood, which was illegally felled in forests home to endangered lynx and bears. And in November 2020, Shell asked on Twitter, "What are you willing to change to help reduce emissions?" #EnergyDebate. And AOC snapped back and wrote, "I'm willing to hold you accountable for lying about climate change for 30 years when you secretly knew the entire time that fossil fuel emissions would destroy our planet." And whether or not you agree with her comments or actions, it generated almost 450,000 negative interactions on Twitter. Social media has really made it impossible for brands to get away with mishaps. And with 38% of consumers reporting that they actively switch from preferred brands for positive environmental practices, it is crucial to market achievements authentically. Next, ESG investments. Environmental, social, and governance investing means investors take into consideration a wide variety of long-term factors such as climate impact, green technology, natural resources, human rights, labor relations, and ethics, in addition to traditional financial considerations. Global ESG assets are on track to exceed $53 trillion by 2025, representing more than a third of the projected total assets under management. A perfect storm created by the pandemic and the green recovery in Canada, the US, EU, and China will likely reveal how ESG can help assess a new set of financial risks and harness capital markets. The application of ESG principles are also expanding to granting loans. And because ESG factors are harder to quantify than other financial data, like valuation or profitability, I think there will be an increased usage of big data and AI analysis approaches. Things like text mining, web mining, and natural language processing are used to systematically gather and assess information about each company, ranging from the firm's reports, news, interviews, as well as customers' company reviews. Again, there is no hiding from sustainability. Honest, authentic reporting is crucial. Next, net zero. The IPCC definition of net zero is a state of balance between the CO2 emitted into the atmosphere and the CO2 removed from the atmosphere. With more and more companies joining the race to net zero, targets are becoming more ambitious and on tighter timelines. This level of ambition is inspiring, but targets must stand up to scrutiny. The journey of how a company gets to net zero is just as important as simply getting there. And before setting a net zero target, a few key mistakes to avoid. So, ignoring scope 3 emissions. The Greenhouse Gas Protocol separates emissions into 3 scopes. It is mandatory for businesses to report on both scope 1, these are direct emissions, scope 2, indirect emissions from the energy they buy. However, most companies aren't required by law to report on scope 3 emissions, which include indirect emissions from the supply chain, transportation of products, product disposal, and more. But important stakeholders are now asking questions around scope 3. And when as an example of how to avoid mistake number 2, when Danone pledged in 2015 to become carbon neutral by 2050, they published measurable interim targets, including a 25% reduction in emissions by 2020, specific 2030 targets for scopes 1, 2, and 3. Now, mistake number 3, if you have reason to aim at something other than net zero, then it's crucial to communicate that in simple, consumer-friendly language. There are also some terms which I'd strongly advise against. Carbon zero is sometimes used to describe net zero policies, but for me, the term clearly implies zero emissions. And when it comes to environmental impact, net zero and real zero can be poles apart. Climate positive is another term for marketers to steer clear of. The term generally refers to products or services that remove more carbon than they emit. But of course, a product's impact goes far beyond its carbon balance, so these climate positive products can have a negative environmental impact, a nuance that's lost in a momentary purchase decision. And lastly, mistake number 4. Businesses can achieve net zero either through a reduction-led approach in line with a 1.5 degrees Celsius future, or through a removal-heavy approach, relying on offsets. Because the overall impact varies hugely as a result, it is crucial that brands publish separate reduction and removal targets. Offsetting should really be the final part of a carbon management plan. Many carbon removal targets rely on negative emissions technologies, but these are in development. Plans that rely on the future success of this technology are built on a certain amount of risk. Next, alternative protein. Consumer interest in non-meat-based protein options is increasing globally. Based on a survey earlier this year, demand for vegetarian and vegan diets was shown to be driven in large part by health, animal welfare, and environmental concerns. As an example, global beef consumption is one of the leading environmental threats to the planet. Cows contribute more to global greenhouse gas emissions than cars, with the average cow emitting up to 500 liters of methane every day, which is 28 more times powerful than carbon dioxide at warming the earth. As such, I think traditional protein farming will be turned on its head this decade as new products and production techniques disrupt the industry. Barclays estimates the alternative protein market will grow from 1% of the global market share in 2019 to 10% in 2029, with just the alternative protein market being valued at $140 billion. That said, plant-based products aren't necessarily a perfect solution either, as many products contain palm oil, which has links to deforestation. As such, I think increased innovation will lead to sustainable, cost-effective alternative proteins in the near future. Carbon markets. The carbon market refers to the market in which carbon credits or carbon certificates are obtained and sold within defined standards for the prevention or reduction of GHGs. There are two types operating globally: compliance markets, which are created by the need to comply with a regulatory act. As an example, Canada has a carbon price that will grow to $170 per ton by 2030. Now, in a cap and trade emissions reduction market, actors buy and sell carbon credits to comply with the cap or limit imposed on their emissions. Trading enables entities that can reduce emissions at lower cost to be paid to do so by higher cost emitters, thus lowering the economic cost of reducing emissions. On the other hand, voluntary markets are markets that function outside of compliance markets, enabling businesses, governments, NGOs, and individuals to voluntarily offset their emissions by purchasing carbon credits. Carbon markets will be a key talking point in the near term, especially following the formation of the Task Force on Scaling Voluntary Carbon Markets last year, launched by the former Governor of the Bank of England, Mark Carney. One of the task force's main recommendations is a single, uniform, transparent carbon market to ease our path to a carbon neutral world. Worldwide, there are 61 carbon pricing initiatives in place or scheduled for implementation. This covers 12 gigatons of carbon dioxide equivalent, or about 22% of global greenhouse gas emissions. And depending on different price scenarios and their underlying drivers, the market size in 2030 is expected to grow 100 times from 2020 and could be worth between $25 and $50 billion. So next, cheap renewable energy. The dramatic halt in economic activity last year because of the pandemic caused only a brief dip in global carbon dioxide emissions. But this year, according to the IEA, global energy demand is set to grow strongly, with both coal and gas use set to rise above 2019 levels. The world relies on power from fossil fuels because, in the past, they were far cheaper than other sources. That said, it is obvious the age of renewables is upon us. Wind and solar plants became 70 and 89% cheaper in the last 10 years, and their capacity will exceed coal and gas in less than 5 years. In fact, solar power has become the cheapest electricity in history, even cheaper than coal. Renewable energy is now cheaper than others because the costs of fossil fuels and nuclear power depend on the fuel price and the plant's operating costs. Renewable plants have generally lower OPEX and of course do not depend on the price of fuel. Fuel is free. Renewable technology costs also follow a learning curve. Solar and wind get cheaper as we increase capacity and the technology develops. Even more, when rich countries deploy renewables, they lower the cost for everyone and make this technology accessible for the entire world. I also want to highlight battery energy storage here, which is a pivotal technology to mitigate the variability of renewable technologies, which follows the same learning curve. Therefore, prices for grid-scale batteries are going down quickly. Up to 61% is estimated by 2030, avoiding, by the way, the construction of gas-fired peaker plants. Next, low-carbon hydrogen. And to be honest, it was hard not to do a full 20 minutes just on this topic, because hydrogen has a long, impressive history. It fueled the first internal combustion engines and launched humankind to the moon. But while the product itself isn't new, how it's both created and used over the coming decades will certainly be. Canada is already a top 10 global hydrogen producer, but the most part is made from fossil fuels. However, if we add on CCUS, then the resulting hydrogen, termed blue hydrogen, is significantly cleaner than the current alternative. The next best for the environment would be green hydrogen, which is produced using renewable energy and a process called electrolysis. So why the renewed interest in hydrogen? Well, there's a stronger push to limit carbon emissions, the cost of renewable energy has dropped significantly, and hydrogen has a number of unique advantages as a climate solution, particularly in the sectors that are the most difficult to decarbonize and where alternatives are limited. Often referred to as the toughest third of emissions, these include things like trucking, shipping, production of steel, fertilizer, and cement. Canada is also among a small group of countries with the highest potential for exporting clean hydrogen, thanks to a clean power system. Note, 82% of Canada's electricity grid is already non-emitting. And number two, plenty of access to water, which is required for electrolysis. But the time to act is now. By the beginning of 2021, over 30 countries, Canada included, have released hydrogen roadmaps or strategies. The industry has announced more than 200 hydrogen projects, and ambitious investment plans and governments worldwide have committed more than $70 billion in public funding. And the forecast is promising, with estimates for 2050 showing global annual revenues of $2.5 trillion, using hydrogen for almost 1/5 of final energy demand and supporting 30 million jobs. Next, the circular economy. So first, in the linear economy, raw natural resources are taken, transformed into products, and get disposed of. On the opposite, a circular economy model aims to close the gap between the production and the natural ecosystems cycles on which humans ultimately depend upon. Take plastic as an example. Canada is currently working on regulations to ban single-use plastics, and further, more than 400 companies have endorsed the new Plastics Economy Global Commitment, which envisions a circular economy where plastics never become waste. Companies representing 20% of all plastic packaging produced globally have committed to a set of ambitious 2025 targets. These are to eliminate problematic plastics, innovate for safer, reusable, recycled, or composted packaging, and circulate 25% of the plastic produced by reusing or recycling. Note the current global average here is just 2%. Now, a quick case study on the fashion industry, which is facing heavy pressure to reduce carbon emissions and waste, not least from a new generation of consumers who demand more environmental accountability. This has given added impetus to the argument for circularity. Sustainability experts say the industry has only just started to explore its potential for product reuse and recycle. A vast quantity of product ends in landfill, but is easily resellable. Improved recycling technologies are potentially transformative. These experts argue for a product-centric rather than consumer-centric approach and digitizing it. The goal? To make fashion traceable, transparent, and more sustainable for businesses, consumers, and the planet. According to a report from PwC, high-profile consultants in the industry, the value of fashion's circular economy could be worth $5 trillion. And included in this valuation are the virtual fitting room market, 3D printing market, eco-fiber market, as well as the second-hand sector. The bio-based economy, biotechonomy, or simply bioeconomy, refers to the utilization and conversion of bio-based materials from forestry, agriculture, and marine ecosystems, as well as related industrial byproduct streams and organic waste, to produce bioproducts, biomaterials, and biochemicals that are reusable, recyclable, and sourced from sustainably managed supply chains. This is crucial for a net zero world. The bioeconomy hits on 11 of the 17 Sustainable Development Goals from the United Nations. And again, why now? Well, there is a shift in large brands' demand for renewable and sustainably sourced materials. Environmental regulation, the promise of a net zero economy, and the rising power of the eco-conscious consumer are moving numerous corporations to include renewable-based materials in their products. This is creating demand for a whole new class of higher value bioproducts across sectoral value chains like packaging, construction, cosmetics, pharmaceuticals, and automotive sectors, to name a few. These types of bioproducts can enable numerous advantages. For example, bio-based materials are often sought by transportation manufacturers as the materials are lighter compared to conventional options, and as a result of less weight, there's greater fuel efficiency. In the construction sector, bio-based additives with cementitious properties can help to strengthen and reinforce cement and concrete. As an example, H&M will be launching a new collection featuring vegan leather made from prickly pear cactus. And in fact, the United Nations Environment Program notes that fashion is among the world's most polluting industries, generating 1/5 of all wastewater and 1/10 of all global carbon emissions. Vegan leather demand is expected to grow 50% annually for the next 5 years. And just last month, Chipotle, ELF Makeup, and RuPaul launched their second line of plant-based vegan makeup. And these collabs are also useful for new customer acquisition. According to ELF's chief marketing officer, 100% of the sales from the previous Chipotle collaboration were from new customers. She says, "I believe the real value of a brand is thinking about how you engage, entertain, and bring the consumer into the experience in different ways. When you break out of the constraints of what you're supposed to do within a certain industry and outside of outdated parameters, that's when the magic really happens." And lastly, blockchain, which I think has the potential to transform how humans transact. It is a decentralized electronic ledger system that creates a cryptographically secure and immutable record of any transaction of value, whether it be money, art, goods, property, work, or votes. Or very simply, blockchain provides a verifiable record as to who got what from whom. I think adopting blockchain technology will now be highly sought after for sustainability-driven companies. I think the key uses will be supply chains. Companies and consumers can transparently track products from origin to store and choose products based on the full life cycle. Resource management. Blockchain can underpin a transition to decentralized utility systems at scale. Platforms could collate distributed data on resources, for example, household level water and energy data from smart sensors, enabling more informed and potentially decentralized decision-making regarding system design and management of resources. In finance, blockchain-enabled platforms could potentially revolutionize access to capital and unlock potential for new investors and projects that address environmental challenges, from retail-level investments in green infrastructure projects through to enabling blended finance or charitable donations for developing countries. In carbon markets, blockchain platforms could be harnessed to use cryptographic tokens with a tradable value to optimize existing market platforms and create new opportunities for carbon credit transactions. Also, I think the blockchain has the potential to track impact and compliance of environmental treaties while decreasing fraud and manipulation. But like all others, this is not a perfect solution either. Proof of work blockchains such as Bitcoin and Ethereum consume considerable amounts of electricity to process transactions and provide network security. The Bitcoin network alone accounts for about 0.65% of total global electricity consumption, while the share of renewables in mining is higher than average at around 39%, compared to 25% of electricity globally. More can certainly be done. So in closing, I'd like to reiterate how important sustainability is to our collective future, especially those of our children. And there is no silver bullet to solve climate change. It is a complex effort requiring a vast number of options. Also, that sustainability is now a must-have. But if you choose to follow this path, remember that consumers today are aware and educated, and they show no mercy for mistakes. Environmental and social concerns must be a priority, all the way from the energy you use to your product's packaging. It is all about 360-degree brands. Consider everything. Invest in a sustainability manager. Measure your company's carbon footprint. Make the most out of this opportunity, but do it right. Thanks for your time. I hope this will spark a few conversations in your life at work and at home.
Thanks, Oshada. That was a brilliant presentation. Thank you for that. And does anybody have any questions for Oshada? If so, can you put it in the chat? We do have a question coming from Peter, actually. Has the hydrogen roadmap been updated lately?
So that's a great question, Peter. The hydrogen roadmap has been in development for about 3 years. And if you're familiar with government bureaucracy, there are a lot of layers of approvals that are required. And so some of the data in this document isn't accurate anymore because this is such a fast-moving technology pathway. But the idea is for that document to be somewhat living. So it hasn't been updated yet, but there is a work in progress.
Right. So we have another question from Emily Short. What sector/industry needs to change its practices the most to become more sustainable, in your opinion?
Oof, that is a great question. In Canada, given that the majority of our electricity, as I noted, 82% is already non-emitting, I think the biggest opportunity lies in transportation and industry. And I think there for light duty vehicles, electrification is a great option. However, that becomes more problematic for the medium and heavy duty types of vehicles because you need a larger battery and the larger battery has more weight. So now you're in this vicious cycle of increasing battery size and really increasing the weight such that you need a bigger battery to carry that weight, and then you need more power to carry that battery. And so this is where hydrogen really has a big opportunity.
From Peter again, he said, thanks. Can you share links for the H roadmap? Last one I reviewed was 10 years old. And then Robert actually had mentioned, so he says, great presentation and really interesting topic. Can you elaborate a bit on the scope 3 emissions? What questions we should be asking organizations to capture it if this is a pitfall in their sustainability or net zero position?
Yeah, that's a great question, Robert. So scope 3 is the emissions from indirect emissions from supply chain, movement of products, disposal. And it's almost a loophole for a lot of companies because a lot of legislations globally don't require this type of reporting. So I think you want to be just upfront about it. Any company who's reporting on scope 1 and 2 understands what scope 3 is. And I think you should just be asking, if they're not reporting on it, why not? I think simply saying, just because we don't have to isn't a good enough answer anymore. And customers, investors, stakeholders won't accept that answer. And, if you can find more details about, their indirect emissions through supply chain, that'd be sort of great information to have. And is this a pitfall in their sustainability or net zero position? I wouldn't say it's a pitfall per se, because generally it will be a smaller percentage of their overall carbon intensity, but it definitely plays a part. And, we are really on the edge of trying to, stave off this or try to achieve this 1.5 degrees Celsius. So I think every, gram of carbon dioxide emission counts. Also, I added into the chat the link to the strategy. It was released in December 2020. And if you have questions, I'm happy to follow up on that afterwards.
We have another question actually coming in here from Ed Kennedy. The decline in solar costs has been impressive. Are you aware of any solid predictions of of further cost reductions over the next 5 years?
Yeah, that's a great question. This isn't exactly my area of expertise, but the little that I read about it is saying that as scale, again, goes higher, then costs will come down. But I think the key here is really the storage. And, hydrogen also plays a role here. I'm going to sound like a broken record. But the problem with solar wind is that, there's nowhere to store it when the sun isn't shining. What are you going to do at night? You can't just rely on solar energy. So a lot of farms, there's a big project in Australia coming up that's going to be combining solar and wind. And what they're going to be doing with excess energy or spillover energy is producing hydrogen. And then you can put the hydrogen back through a fuel cell to make electricity. So they're thinking about using hydrogen almost as a big battery. And whether it's going to drop, they are expecting it to drop, especially, with innovations like offshore solar and offshore wind, to take advantage of reducing land. So I think there's opportunity there for sure.
For sure. So we have one more question from Robert again, and it says, one other question, understanding the trend and growth we're expecting from a lot of these different markets. Do you see concerns with particular inputs or having supply not keeping up with the demand, at which point the cost to convert to a more sustainable position is too cost prohibitive for businesses to adapt?
Yeah, that is a great question. And even with hydrogen, in Canada, we are very lucky. As I mentioned, we have a lot of access to fresh water, which is required to produce sort of the lowest carbon intensity hydrogen. But if you're thinking about landlocked countries, that water isn't an option. And then what are you going to do? And is it a good idea to be using fresh water to make energy when people are living in droughts and we need that to grow crops or, just for drinking water? So that is definitely an issue. And even I think in terms of the biofuel space, that food versus fuel debate is excellent to have. And that's why a lot of new fuels are requiring what we call second generation feedstocks. So only waste to be used to produce fuels. And I think those are important conversations to have.
Perfect. Thank you. Those are great answers and great questions as well. So Pouya, I hand it over to you. Oshada, once again, thank you for your time. And that was a great presentation.
Yeah, absolutely. I'll try to keep this fairly short and sweet. It's really just to take the opportunity to thank Oshada for this really enlightening and great presentation. And every time I talk to Oshada on sustainability, I always learn something new. And I think it's, as Oshada said, it's a constantly evolving area, and we have a responsibility to kind of leave the earth in a position where people can survive beyond ours. And so we're on this earth for a finite period of time, but our generations beyond us will be here for much longer. And so I think we have to be constantly evolving, and there's always solutions to every challenge that we face as a species. And so this is a great challenge and the biggest challenge of our time that we're going to be facing. So a big thank you to Oshada. Thank you to everyone that helped organize this, and we'll see you hopefully shortly.